I want to talk today about exit strategies for profitable trading, and this presentation is actually kind of a sequel to the presentation we did here about a month ago at Online Trader Central, which was called Consistently Profitable Trade Setups, the Analysis and the Tools. And in that presentation I talked about the types of setups that I look for, and we did talk a little bit about how we exit. We had a lot of feedback from that. People got a lot out of it. And one thing we decided, though, was we would talk a little bit more about how to get out of a trade than how to get into the trade. So there's a lot to cover, and some of it will be using some of the same techniques and strategies and tools that we talked about before. There will be a little bit of review, but there's a lot of new things here, some new tools, especially for you NinjaTrader users. We have some new tools we want to show you and some new techniques and strategies to show you the manner in which we get out of our trades. So let's get right down to it and start with the principle of getting out of a trade. Now, getting into a trade is really the easy part, because when you enter the trade, your account is unchanged. But getting out of the trade is where the profits and the are maximized and the losses are minimized. In fact, I got an email from a fellow this week saying, "Why do you say getting out is the hard part? We're getting in, you have to get it just right." And yes, you do have to plan your entries very carefully, but the market is a dynamic structure, and it's not the same 2 bars later than it is on the bar that you entered. Yes, we use technical analysis to try to optimize our percentages, but things change in the market, and so we have to have good strategies that will help us protect our accounts as well as build our accounts. So let's look at some ways that we make our accounts grow by getting out of a trade. Now, this may seem a little elementary, but in order to talk about this, we have to talk about the basics first. And there are 3 types of exits that I want to talk a little bit about. There are profitable exits, there are losing exits, and there are break-even exits. And there are different types of profitable exits are profit targets and trailing stops. Once you have a little bit of profit, you can enter a trailing stop. And then my favorite is the discretionary type of exit, which is really, as you look at and listen to the market, you use your analysis, your experience to see when you think the market might be changing in your favor or against you. And so there are discretionary exits as well. And the same goes somewhat for losses. When you enter your trade, you will most likely have a fixed stop loss so that you don't blow your account out. Yet you might also see things as you're watching the trade in the market that cause you to make a discretionary exit. And there are break-even trades, and we'll talk about that a little bit, but mostly that's just going to be a part of money management, which we will touch briefly upon, but I want to talk more about the technical analysis in the money management side of the trade. So when we talk about a trade, it's really an organism in and of itself. And even though we're just going to talk about primarily exits here, we have to talk about that in context of the entire organism. So we look at the anatomy of a trade, and it starts with a market bias. You think for some reason that the market's going to go up, or you think it's going to go down. I'm not going to get into why you think that and how we think that. Please refer to the webinar that we had here last month, which is posted on our website, the Consistently Profitable Trade Setups. We talk a lot about how to get a market bias, identify trade setups. Once you have a market bias, you're going to be able to identify an area in which you want to enter the trade. And that's usually going to be close to support and resistance, which gives you a low-risk entry opportunity, or you're going to identify a pullback in a trend, which gives you, again, low-risk entry if the pullback actually stays a pullback instead of a reversal. And then once you have identified an entry area, well, and a part of identifying that entry area is identifying your stop loss. Once you've identified that entry area, you can know where to put your stop loss, and we're going to talk about some of the analysis of how we identify that. Not so much the money management side of it, but the technical analysis side of it. and then the profit target. And you have to have both in order to judge your risk to reward on every trade. So you can't judge your reward unless you have some sense of what you think you're going to make. So I have some techniques, some patterns, and some tools I want to show you that help us identify potential profit targets for specific types of trades. Once you've managed to identify your risk to reward, you get an entry signal. Again, I'm not going to go into specific entries. Please refer again to the previous webinar. But we will talk about timing a little bit. And then comes the part of the trade which is, for me, the most challenging. It's the confirmation period. Usually it takes several bars for the market to move one direction or the other once you enter the trade, and you never know if it's really going your way or not. And that's where you just have to cool your heels and sweat your palms, or just have faith in your technical analysis, your setups, and your strategies. Once the market does go in your direction, you can enter a trailing stop. I use a trailing stop, and we'll talk about what kind of stop I use and how I trail it. And that will keep me in the market either until my target is hit or the stop gets hit. And then you can also identify exits with trend exhaustion, and this is really the meat of this presentation, is also showing you how to identify when the trend is coming to an end and it's best to take your profits and put them into your account. Some of the important tools we need to do this are the Arps Radar 1 Fear Greed Indicator, the Radar 2 Price Leader Acceleration Oscillator, the Triple Trender, Price Magnets, and a great tool, one of the foundations of my charts is the automatic trend lines. Let's take a look at some of these tools. And let me introduce you to this tool, the Price Magnets. It's brand new for NinjaTrader. It's been on some of our other platforms for quite a while. It's the tool we use to identify our profit targets. So in order to make your target, you have to have a target. And this is one of our primary tools for doing that. It looks for specific market patterns, and once it identifies market patterns, it will start to plot these dots across the chart, which are areas that are likely to be achieved as a result of the market patterns that it identifies. So you can see it saw this on this bar right here, it saw a pattern that said, well, price is likely to make it up here, hasn't made it there yet. But you saw on this bar that it said price is likely to make it down here, and it finally did. On this bar here, it said, well, price is likely to make it down here. So we use the price magnets, and that's these little dots crossing the chart. And I'm just introducing you to the tools here a little bit. For those of you that aren't familiar, the triple trender here is these three lines that follow the price, and we're going to discuss those. For those of you that are not familiar with them, they are a tool that we use for trailing stops and for trend identification. We have the auto trend lines tool, which is a tool which will automatically draw uptrend lines and downtrend lines. And when there is no uptrend line or downtrend line, it'll draw the horizontal support and resistance. It'll also give you signals when the trend line is broken, as it did here in early August on this Euro-Yen chart. We got a breakout of the downtrend line, you can see. We're going to talk about the Radar 2 Price Leader, which is the most important tool on every one of my charts. It's a acceleration oscillator. It's a two-line oscillator that we use to identify the acceleration and deceleration, and we use it to time our entries and exits. And the other main tool that I need in order to identify the best exit setups is the Radar 1 Fear Greed Indicator. This is a tool that is a histogram that shows the strength of the buyers and the strength of the sellers. Basically, the green upward pointing bars shows the strength of the buyers, and the red downward pointing bars show the strength of the sellers. We have some good videos on our website that go into details on these tools, so I don't want to dig too deeply into them right now, but invite you to go to our website at www.janarps.com to learn more about these tools, some of the how they work. Right now I want to show how we use them to get out of these trades. A few other helpful tools that I'm going to talk about today are the Cycle Turning Points tool, the Radar 3 Trend Strength Index, Trend Exhaustion 2, which is a great signal dot tool. It gives us a warning in real time when the trend is likely to be expiring. and trend exhaustion 3. I'll show you some of these tools and how we use them to identify good exit opportunities. Here's what some of those tools look like. This is the trend exhaustion 3 dot. It's a signal dot right here. You can see it says TE3 on the bottom. And it plots at the end of this bar in real time when it identifies certain market conditions and oscillator conditions that are typical of trend exhaustion. And we have trend exhaustion 2 also. You can see it's plotted some dots here. Trend exhaustion 2 plotted some dots here, here, and here. And this is another signal tool that uses mostly price patterns to help us identify trend exhaustion. And both of these tools have these cool little cloud dots that plot around them that give us a warning before the dot even appears that some of the conditions for these signals have come together and that we could potentially have a trend exhaustion signal. So we get plenty of warning with these warning dots. You can turn the warning dots off if you want. I like to use them because it gives me some heads up that we might be looking for some trend exhaustion signals. We have a cycle turning points tool here which we're going to use in some of these strategies, and this tool is basically a tool that helps us identify the orientation of the trend as well as the timing of the trend. It basically plots these chevrons, 3 different magnitudes at peaks and valleys as they appear on the chart. There's major peaks and valleys, which is the big chevron, intermediate peaks and valleys, which is the medium chevron, and the small chevron is minor peaks and valleys. So, for instance, in a case like this, once you see the big chevron, you know that you kind of want to trade in the long direction. And here, once we see the big chevron pointing up, that means we want to trade in the short direction. You can also use this to see visually the rhythmic frequency and patterns of these peaks and valleys in the market. The other tool that is important on my charts is the Radar 3 Trend Strength histogram, which is this histogram you see. It's a histogram that shows me the strength of the trend, and it points up and is blue when the trend is strong and bullish, and it points down and is pink when the trend is weak or strong and bearish. And if it's weak and bearish, it will be blue pointing down, and strong and bearish, it will be pink and pointing up. And there we have a new tool that we have for NinjaTrader also. Look at the color of these bars. It's a nice paint bar tool that we've added to our NinjaTrader catalog. This is our Trender paint bar, and I'm going to talk about the Trender in just a little bit. This tool will paint the bar relative to whether the trender is above or below the price. So those are the tools that we want to talk about exits. And the first exit we want to know about is the exits that occur when you're planning your trade. So when you're identifying your entry area, you again want to have a market bias, and whether the market you think it's going to be long or short. One of those is going to be the case. You think you see a tradable opportunity. And so once you see that tradable opportunity, then you're looking for areas of support and resistance in order to calculate your risk to your reward. And again, that is calculated by looking at your stop loss relative to your profit target. So to calculate your stop loss, again, we're going to put it near the resistance area. And just a note, this is elementary to a lot of you, but there are a lot of people, there are some people out there that have the financial means to move the market a few ticks this way and that way. And they know where people put their stops at the tops, at the peaks and valleys. So generally I like to keep my stops a couple of ATRs away from those peaks and valleys, unless I really need to just get out at that peak or that valley because it's going to nullify my my trade setup. Once I know where my stop is going to be, I can calculate my account risk. And I want to do this myself. I generally like to enter in units of 2 so that if I can make a good trade, I can get out at my profit target and have a second unit to carry on with the trend if I can catch a run. So I calculate my account risk by multiplying in units of 2, depending on whether it's a stock or a commodity or a currency. And then I also want to know where on this price chart, what's going to nullify my trade setup. If something happens and my trade setup is no longer valid, where is that point on the price chart? So let's look at how to identify entry areas and stop losses. Here's a chart with some of the tools we were talking about on it. And you say we were looking at this stock chart, and we see price coming down, and as the price is coming down, we're noticing this bullish pivot divergence in our radar 1 fear greed indicator. Now, the fear greed indicator is an excellent tool for identifying divergences because it's looking at, as I said, the strength of the buyers and the strength of the sellers. So as the price is coming down, if the sellers are getting weaker, that basically means there's less and less supply in this market. And so the demand is likely to increase and the price is likely to go up. So I'm starting to look for a long opportunity as I'm seeing this. We even get a trend exhaustion 3 signal right here at the bottom. And so I'm really looking for an opportunity to go long. About here you can see the bulls are starting to take over, and we even had a trend line breakout signal right here. The trend line was originally right there when that bar was hit. And so now I'm looking for confirmation. I'm not convinced yet that we have a bullish trend because I want to see higher lows and higher highs. So sure enough, the price does come back, and once it bounces off of this trend line right here, this previous low, which was, I believe, this area here was where the stops were run from this previous low. But it goes back to that previous low, that support, and bounces off of it and starts to make higher highs. So I'm convinced now that we're in a bullish trend. I can look for my entry signal, and I'm now going to say my stop loss is going to be below this point, not this point down here, because basically if the price comes down below this low right here and closes below that low, then we're no longer making lower lows and higher lows, excuse me, and so we're no longer in a bullish trend. And so my nullification line, my line in the sand, let's say, is right here where this previous low was hit twice, and that's going to be what I call is enough for me. It's going against me. So that's going to be my nullification zone, and the trend line here is my support zone. I'm going to try to get in as close as I can right here. And then we're going to talk about the Arps trender a little bit. You can see that it has, the Arps trender, triple trender is synchronized with 3 blue lines below the price, and we pulled back into it. Those of you that are familiar with triple trender know what I'm talking about, and I'll explain it a little more in a few minutes. Again, we pulled into the short-term trender, so I could also use the medium-term trender at this point as a trailing stop loss. But this is how I identify my entry area. I'm going to set my stop a little bit below this trend line here, let's say around $18 in this example. And now that I have identified my entry area, I want to figure out what my profit target is. And you can see as I'm looking at this chart that way back here, it's identified a profit target of about $28.75 in the price magnets here. And that looks like a pretty good profit target to me. I think it could probably make that. I believe this trend will go back up that much. And I'm going to calculate my risk and reward to this price magnet at $28.75. So this way I can say, well, I'm risking $18 is my stop loss. Right now the price is $21.25, and I'm trying to get $28.75. Looks like I'm risking a little bit. I'm going to gain about twice what I'm risking there if I can successfully get in right about here. So there's all kinds of signals I can use for entries. My main entry signal is going to be when the radar 2 price leader crosses above the fast line, crosses above the slow line, and I'll explain that to you some more shortly. Once we have gotten into the trade, again, I'm not really going to get into the entry signals. I'm going to refer you to our website once again, www.johnarps.com, to review some of the other webinars that identified the entry setups. But once we are in the trade and we're looking for a way of keeping our profits while we have them, we want a trailing stop, and for this we use the Arps trender and the triple trender. Now, some of you may be familiar with the trender, so I'm going to go quickly through my description of it on behalf of those that have seen some of our presentations before, but I do want to describe it and discuss it for those of you that are new here. The trender is an excellent stop loss tool. It's a volatility-based line that follows just closely enough to the price to not get crossed by the price until the price changes direction. So you can see it stays on one side of the price until the price crosses it, and then it flips to the other side of the price until the price crosses it again. And so this works as a great trailing stop because, as you can see, if you're going in this direction, it's following you just closely enough to enable you to keep your profits. Now you can see in a situation like this that the trender is crossed by the price, but it didn't flip, and that is because we can set the trender to require the price to close across the trender in order for it to flip. We have several different sensitivity settings for the trender. You can see on this S&P 500 tick chart, which is a really fast intraday chart. I use this type of chart for my scalp day trading. I like to scalp the S&P. And so you can see we have the Arps trender here on this chart set at a sensitivity of 4, and it follows the price nicely until it gets crossed. And it gets here in the sideways, it gets chopped up a little bit, and then when the trend starts moving again, it follows the price pretty nicely. Now, if we change the sensitivity setting to a lower setting, it will follow the price more closely. You can see it gets stopped out more quickly, and it gets chopped up in the sideways moving market a lot more. So we can also set the sensitivity setting further away. In this case, I have it set to 7, and it stays away from the price and doesn't get crossed and flipped quite so often. So in this way, we can use the trender at different settings, which are akin to looking at the trend on 3 different time frames, let's say, 3 different perspectives. And we have created a tool that does this for you. We call it the triple trender. It basically runs the trender at 3 different settings at the same time. And it's a great tool for entries and for exits. And it's a good tool for being able to identify a micro trend, which is the short-term trender, an intermediate trend, which is this intermediate trender, and the longer-term trend, which is this lower trender. And one way people use to trade this is they like to, some people say, just only trade it when all 3 trenders are in your favor and get out when the short-term trender is crossed. Now that's true for a lot of types of traders. I myself, it depends on the nature of the chart. If I'm scalping an S&P with a 500 tick chart, I will often use the intermediate or long-term trender as my stop loss and stay in even if the short-term trender gets broken. Once again, I want to show you this little tool that we created for not only NinjaTrader. It's on a lot of the platforms that we support: eSignal, MultiCharts, TradeStation, and it's a paint bar study that paints the bars relative to which side of the trender the price is on. In this case, I have it set to the same as the intermediate trender, so you can see as long as the intermediate trender is bullish, the bars are green, and as long as the intermediate trender is bearish, the bars are red. I also happened to put the price magnets on this chart just because they were there. Speaking of price magnets, let's talk about the price magnets for just a minute, because they're an important tool for identifying the profit targets. Profit targets are important because, as a wise man once told me, you can't hit your target if you don't have your target. So it's very important to have some sense of what you're shooting for in order to, 1, gauge your success, and 2, keep you in the trade to maximize your profits. And we have several tools that identify price targets, and the most important of those is the price magnets up and down. We also have some flags identifiers, and flags are a great tool for identifying profit targets because that are built into that technical analysis pattern. So let's look at the price magnets for just a bit. I briefly discussed them on that earlier chart. As I said, when it identifies certain price patterns, it says, oh, well, it looks like we've seen a price pattern that indicates that price is likely to move to a certain level. And so it sees a pattern and it starts plotting the magnets. And sometimes it sees other patterns that plot the magnets in the same general vicinity. This really strengthens the idea that that's an area that the price is likely to move towards. You can see here it saw a pattern and said, oh, price is likely to move to this price. And sure enough, we got another price magnet right around there. And both price magnets got kissed. Here, as you can see, you saw a pattern and the price moved to this price area that the price magnets identified. Another interesting thing about the price magnets is sometimes the price will just kiss the price magnet, as it does here, here, here. And sometimes the price will blast through the price magnet. It's kind of like it does here. And you can generally, when you see a blasting through the price magnet, you can have faith that the trend is likely to continue in that direction. Whereas often when it just kisses the price magnet, you may be looking for a temporary reversal in the trend. Price magnets down is the brother-sister tool of the price magnets up. You can see again it plots the dots on the chart until the price crosses it. In this case, it blew through it and kept going in the strong downtrend. Here you can see I identified at this point a profit target at about 105 on the euro yen, and sure enough the price just kissed it, reversed a little bit, blew through it after it showed another price magnet, and then kept following strongly down. And you can see, interesting, when it kissed this price magnet right here, it just kissed it, turned around, and went the other way. Same thing happened here. The other profit target tool that I want to talk about briefly is the bull flag and the bear flag tools, which a lot of people are familiar with these patterns, and we have some cool tools that identify them. And the nice thing about the flags patterns, which is basically a pullback in a trend, is once you have a confirmed breakout of the flag, which is identified by this dot that the Arps bull flag tool plots, then you can calculate the vertical distance of the flagpole and add it to the bottom of the flag, and you get a profit target that is more often than not achieved after a flag breakout. You can see again the bear flag works the same way. It's a pullback in a bearish trend, and once you get a confirmed bearish breakout, you can add the vertical length of the flagpole to the bottom of the flag, which I believe is right there on this chart. This is another 500 tick chart, this time of an Australian currency future, and it plotted the flag price target, which just barely got hit at the end of that day. Actually early the next day. Now for the meat of the presentation. There are ways to get out of your trade, like profit targets and trailing stops. And we didn't talk enough about the trailing stops. I'm going to get to that a little bit more when I talk about trend exhaustion and show you some examples. We did talk about the triple trender, and I'll show you how I've used that in some of the examples that are coming up. We're also going to show how we use trend lines to identify trend exhaustion. And for me, one of the most important ways of identifying trend exhaustion is divergences. And then we're going to talk about the trend exhaustion 2 tool and the trend exhaustion 3 tool. And these tools also have these cool warning dots that alert us that some of the conditions are lining up for trend exhaustion before we actually see the trend exhaustion condition. So let's look at the trend line tool for just a minute. As I said, this is a tool that will automatically draw trend lines on a chart, and you can adjust the sensitivity of the trend line to your liking. This, I believe, is the sensitivity setting of about 4 or 5. You could just easily set it to a higher sensitivity, maybe 8 or 9, will give you this bigger trend line here. And it plots down trend lines and, as I said, up trend lines. And when there is no up trend line, in other words, you're at the lowest low, it will plot the horizontal support level or the horizontal resistance level at a highest high. It also tells us when the trend line is broken by giving us these breakout signals, and it'll also tell us if we get a pullback off of that breakout, which is a failed trend line test. Now this is an important tool for identifying exits because it's really the first signal that your move is coming to an end. Price is moving in your direction. Let's say you're in this trade here. It's moving in your direction pretty strongly, but once it slows down enough to break the trend line, then you might want to consider taking some early profits at that point in time. I talked about divergences, and I don't want to go into a lot of divergence theory at this point in time because, again, we talked about that in the Consistently Profitable Trade Setups webinar at www.janarps.com. But for those of you that are not familiar with divergences, a quick primer: when you identify lower lows in the price and higher lows in an oscillator like the Radar 1 Fear Greed indicator, you have identified a bullish pivot divergence. And this is an excellent opportunity to get some warning to get into a position or to get out of a position. Either way, it's a sign that the trend is likely to be exhausting its strength. The same goes true with the bearish pivot divergence. You can see we're making higher highs in the price here, lower highs in the Fear Greed indicator. What we're seeing here, as I said, the Fear Greed indicator is identifying who's stronger in the tug of war between the bears and the bulls, and it's really showing where that center line of that bear-bull tug of war rope is. So as you can see, the bulls weakening at this point in time. There's not much more demand. The buying is kind of petering out, and so pretty soon there's going to be more supply than demand, and that's going to mean price is going to go down. So that's why we use the Fear Greed indicator as a good tool, especially for identifying pivot divergences. Here's a few more quickly on the Spider ETF. You can see a nice bullish pivot divergence back here last year when kept making lower lows in the price and higher lows in the Radar 1 Fear Greed indicator. A similar bearish pivot divergence up here last April, and again in June. If you were a reader of my blog, which is posted on janarps.com, it's called Hawk Scan Center Report, we identified this bullish pivot divergence where in June where it was making lower lows and the Fear Greed indicator was making higher lows, and that's when we started telling people that this pullback in the bullish trend is being identified as a pullback bullish opportunity. So I'm going to show you some examples of how I use divergences to exit the trade in just a few minutes, but I want to finish talking about the specific tools. Here's Trend Exhaustion 2, which is, again, price patterns that identify the end of a trend. And you can see here's one at the top of this trend, and it gave us all these warning dots before it finally printed a trend exhaustion signal at the bottom of this little downtrend. And Trend Exhaustion 3 is a similar tool. You can see we got one a little bit early down here, but it would have kept us out of this chop, which nobody likes to trade chop like that unless you're just trading 1 or 2 days. Trend Exhaustion 3, you can see it gave us this little warning dot 1 day before the signal there, 1 day before the signal there, and 1 day before the signal there. And again, you can see how these price magnets just get kissed by each prospective time the market goes up or down. It seems to just be drawn like a magnet to these things. And now the last important tool I want to talk to you about is the timing tool. Once you see some of these signals, divergences, trend exhaustion signals, once you see some of these signals, you want to get out as quickly as you can. And the tool we use for that is the Radar 2 Price Leader Acceleration Oscillator. This is the tool that if I could have if my chart were a desert island and I could only have one tool on it, it would be the Radar 2 Price Leader. And the reason being is it's such a versatile tool and such a fast tool. What this tool is showing me is akin to the tachometer in your sports car or your motorcycle. It's showing me the acceleration or deceleration of price. Now, what do I mean by that? What I mean by that is a lot of tools out there built into all of your platforms, the RSI, the stochastics, momentum, they're pretty good tools, but they're all based on showing how fast price is moving up and how fast price is moving down. But what I want to know is not how fast is price moving. I can see that. What I want to know is what are the forces being applied to price. Are we putting on the brake or are we putting on the gas pedal? And so we've come up with the price leader to calculate the second derivative of the velocity of price, which is the acceleration or the deceleration of price. And it's a two-line oscillator, basically. When the fast line is above the zero line, it's showing us that we're in a mode of acceleration. And when the fast line is below the zero line, we're decelerating. And we use the cross of the fast and slow line to identify our timing signals, when to exit or when to enter the trade. Let's take a look at some examples. Here you can see we're in a nice downtrend on this futures chart, and you can see at this point in time we're seeing a nice divergence form as the price is making higher highs and our radar 2 price leader is making lower highs. So at this point I'm licking my chops saying we're in a downtrend. I have a bearish pivot divergence. We even have actually a kind of a pullback divergence because this is a higher high than the previous oscillator, but the previous peak. But that's an entry signal I don't want to talk about. We see a nice opportunity to go short right in here in August, and so as soon as this fast line crosses the slow line right there, we enter short, and as soon as the fast line crosses the slow line right here, we close out our short position. You can see we also have a similar bullish pivot divergence here. We make a double bottom, which is often a basic entry signal. You see a double top, double bottom. You can guess that the price is testing previous lows and could potentially reverse at that point. So we see this double bottom and lower lows, higher lows in the price leader. And so as soon as we get across to the fast line over the slow line right here, which I believe is on this bar, that's a good entry signal for this long. And you can ride this trend up as far as trend exhaustion will take you, or you can exit as soon as the fast line crosses the slow line somewhere around this bar right here. We're going to talk about putting all this together now and show you how we can use these tools in concert to come up with the best possible exit opportunities. In fact, here's a trade. It was just earlier this week. As I mentioned, I like to scalp the S&P futures contract, the E-mini. And so earlier this week, I got to my charts. I live on the West Coast, so for me, the market opens at 6:30. I usually try to get in to my office pretty early in the day. And I saw that price was coming down when I got in here. And at the same time, I saw this bullish divergence in the radar 1 fear greed indicator, which gave me an indication that I could start the day scalping long. And so I'm thinking, okay, let's find an entry opportunity. And when the market opened, this is vertical line, it's the market open. My risk at that point was about 1390, and I was about 1392 right there. I saw a price magnet at 1396, so I'm thinking I could take a couple of ticks there, and I get in long as soon as pretty shortly after the market opens. Actually, the triple trender all got bullish. I made higher highs, and I'm in long. And now I'm shooting for my profit target, and sure enough, right here, the profit target gets hit. The price leader fast line crosses the slow line, so I'm exiting one of my 2 positions right there. Now, again, as I said, I enter usually with 2 units, so I've still got 1 position left, and price goes down, and I lost my second position right here when the triple trender got broken. But look at this. I notice at this point that I still have a bullish radar 1, radar 3 trend strength index, and I get this nice cycle turning point down in a pullback on this trend. When you get these cycle turning points down when the trend index is up, that's almost always a pullback in a trend. And so I look for an entry opportunity, and I see it right here when the radar 2 crosses the fast line over the slow line, and this pullback on the bullish trend, and I get back in right here, And sure enough, that's for those of you that are familiar with some of the setups that we talk about at the Young Arps Traders Toolbox, the scans entry report. This is called pullback 23. Good entry pullback in the trend, and I got in there again with a profit target at this point of 1400. We all know 1400 is going to be an area that people are going to test anyway, likely to hit congestion there, and we have a profit target there that was calculated earlier in the day. So I have a pretty good risk to reward at that point in time, and the profit target gets hit, and I have one contract left, which I think I ended up gaining a little bit more profit when the long-term trender got crossed right here. Now again, I want to talk about the triple trender for trailing stops. This is a 610 tick chart, which is basically a bar a minute on the S&P. So for me, the long-term trender is a better stop loss on a fast chart like that. And these pullbacks into the short-term and medium-term trender will often keep going with you. But if it breaks the long-term trender, then especially if I have a profit, I'll use that as an opportunity to get out. On the other hand, if I'm trading on a longer term, let's say a mini swing chart on stocks or something, then I will often get out the short or medium-term trender with my trailing stop. Let's take an example of that. You can see we had on this S&P, well, this is again the futures contract, this time 1,000 share volume chart, and you can see our trend line at one point was right here, and we were making lower lows, but we got a nice divergence in the radar 2 and radar 1 and overbought signal right on this low. So those of you that are familiar with some of our best trade setups know that a good overbought signal on a divergence like that is a great pullback opportunity, and so I'm looking to get in long. And as soon as this trend line was crossed and the triple trender was synchronized, we got in on a long position here with a profit target at 13.95 at that point in time. Now I'm watching it go in my favor, and so at this point, since this is a longer term chart, I can have my stop at either the short term or the medium term stop loss. It kind of depends on a lot of things, how volatile the day is. If it's a strongly trending day, I will maybe go with the medium-term stop loss. If it's a pretty choppy day, well, I might not be trading. But anyway, I got my stop here at the medium-term stop loss, and now we get a new trend line that's identified right here, and sure enough, we see a trend exhaustion 3 just before it hits our profit target. Finally, it looks like it just kisses the profit target. At the same time, we get another trend exhaustion 3 signal, and price starts to roll over. At this point in time, because I'm seeing this divergence in the radar 1 fear greed indicator, I'm going to get out of both of my positions, probably on the short-term trender. I can move my stop loss at that point from the short-term to the long-term trender. So I get out of one position up here with the trend exhaustion 3 in the target and move my stop loss to the short-term trender. The short-term trender then gets hit right about the time that the price leader crosses over the fast line over the slow line in this bearish pivot divergence. Here's one more. This is a Marietta Materials stock chart, and we see again a nice bullish pivot divergence to set this up, and a trend exhaustion 3 signal back in June. And at that point in time, our trend line was right here. And so we see a good entry opportunity. My stop loss is right down here where this price magnet down is. If it's going down to that price magnet, I'm on the wrong side of this trade. But because the cycle turning points is showing me at this point in time that we've had our maximum valley or maximum down bar, I'm looking to go up. So we get into this trade. Once this trend line is crossed, we pull back to support. I can get in somewhere around here and follow this trade. At this point, my stop loss is on the medium-term trender. I don't quite make my profit target. I get a warning, trend exhaustion 2 warning right here, and starts to roll over. So at that point, I see trend exhaustion 2 roll over. I move my stop loss to the short-term trender, And I'm seeing also divergence again in the radar 2 price leader. And so as soon as the price leader is crossed, fast line and slow line right there, I'm out of my position. And by the time, that's about the same bar that the short-term trender is broken. So I'm out of both of my positions. Now, DR Pepper says, do any of these indicators repaint? I'm not exactly sure what you mean by repaint. The trend line tools, for example, will erase the previous trend line and draw a new trend line when the most recent trend line is identified. So yes, the tool like that will repaint. And we have tools like wave counters that will recalculate the waves as the market conditions change. But the tools like the triple trender or the trend exhaustion 2, the trend exhaustion 3, or trend exhaustion 1, overbought, oversold, a price leader, these sorts of tools do not repaint. DR Pepper says, do cycle turning points change? Cycle turning points do change. What it does is it looks for the peaks and the valleys, and it identifies a test every time it's making new highs and lows. And as that test confirms a new level of peak or valley, when it starts, it's just a test. And if price continues to move in the opposite direction, it may be identified as a short, small scale peak or valley. So you have a small scale turning point. But if price continues to move against that peak or that valley, then yes, it'll draw the next chevron. It doesn't really change. It adds chevrons to the peaks and valleys as the peak and valley gets a little stronger. I hope that answers your question, Dr. Pepper, which is a great drink at 10, 2, and 4 in the afternoon. So let's review just a little bit about some of the ways that we use these tools to find some good exits. The important exits, of course, are the profitable exits, and it's important to have profit targets, and we like to use the price magnets to identify the profit targets. And once you have some profits, you want to keep your trailing stops working. Again, as I said, I like to use the medium-term trender, often in the triple trender, as my initial trailing stop. And once I get an exit signal, I might move it up to the short-term trender. And then I can also identify discretionary exits as well. And I look for divergences, trend line signals, and all kinds of other things in order to identify those discretionary signals. And the trend exhaustion signals are good tools for letting me know when the trend is coming to its end. We also like to look for stop losses, and we have fixed stop losses and discretionary stop losses. And the discretionary stop loss is mostly when something happens that nullifies our setup before the fixed stop loss has been hit. For instance, if you think you're in a bullish trend and you start making lower lows, or you see a trend exhaustion signal that was an entry signal or a pullback 23 signal, but the price moves against that signal, you might want to get out before your stop loss gets hit. Now I'm going to go to some examples here very shortly here. I just want to tell you before we start taking examples and looking at some live charts, and I'm going to ask you to give me some symbols that you want to look at. We can look at these charts in real time on these symbols. And let you know that we have a NinjaTrader Toolkit, which has been available for quite a while. And to celebrate our 20 years in business, John Arps Traders Toolbox is going to offer this toolkit to you. These 14 amazing tools, which I didn't talk about all of them, for only $899 today until a week from now, Friday. I believe that's the 16th. And if you're going to be interested in that toolkit, you can look at a lot of videos on our website to talk about these tools. And we'll throw in the new paint bar tool for free for anybody that is interested in that toolkit. And we also, some of you may already have that toolkit, and so I want to let you know before we get onto our live charts examples that we have a kind of a toolkit annex for these brand new tools for NinjaTrader. And there's trend exhaustion 2, trend exhaustion 3, price magnets up, price magnets down, and cycle turning points. And again, we'll throw in the trender paint bar for free if you are interested in that. Alon says, you've shown a lot and you have some interesting indicators, but for someone like me who's not familiar, it's quite overwhelming. Where should I begin? That's true, Alon, and that's why I invite you to go to our website and check out some of the videos on some of these tools. I know I'm going quite quickly, so that's because I have a lot I want to show you. But we have a lot of videos that describe each of these tools individually on our website, and I would invite you to go there. There's a lot of good education there, and there's a free tool anyway. Even if you don't want to buy anything, go to our website and go to the free stuff page, and you can download the free Universal Swing Tool, which is an excellent tool. It's like a measuring tape for the price chart. It shows you how many bars in each swing. You can set the sensitivity to the swing ratios up to down, the price change per swing. It even shows you at what point the swing will be confirmed for the next swing. It's a really great tool, and it's free. Just go to it's free. Just go to our website. Go to the free stuff. The system works with TradeStation. Yes, actually, we've been partners with TradeStation since before it was TradeStation, and developed a lot of these tools, actually all of these tools for TradeStation, and we'll offer the same kind of bargain packages for you TradeStation users as well. So mostly I just want to say thank you for coming, for spending some time with us. Thank you, Ninja Trader, for helping us, and thank you, Kevin at Online Trader Central. Thank you, Kathy at Online Trader Central, and Jan for helping with the questions. And mostly I want to thank you, the participants, for taking your precious time to learn a little bit about some of these exit strategies, some of your tools. Again, grab the free Universal Swing Tool from www.janarps.com. You can subscribe to my blog, Hawks Scan Century Report, which is on the website, www.janarps.com. There's lots of videos there. And remember the webinar specials that are good until a week from tomorrow. I hope you guys have profitable trading, whether you use any of these strategies or any of these tools. I hope that your trading is profitable and that your life is full of the beautiful things in this world. Once again, thank you for your time, and until next time, may the trend be with you.